Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the Week in Focus for the week beginning Monday, May 16th. Well, this week we'll get more insight into the thinking of central banks as the Reserve Bank of Australia, RBA, the Fed, and the European Central Bank, or ECB, release the minutes of their recent meetings. Now, we've seen these reports move the markets before. Just last week, for example, the yen weakened after the Bank of Japan released the minutes of its latest meeting. Now, the RBA cut its rate by 25 basis points at the meeting in question, yet it adopted a neutral stance afterwards. That caused the Australian dollar to gain on the news. Investors will be reading the minutes closely to see just how concerned the board is about the low level of inflation. The market's pricing in one more cut by October, more or less, but could bring that forecast forward if the minutes contain signs of serious concern. The Fed and the ECB, of course, didn't take any actions at their meetings. In the case of the Fed, there wasn't even a press conference afterwards either. We've been hearing fairly hawkish comments from FOMC members ever since the meeting. The minutes may clear up some of this confusion. As for the data, the focus will be on the UK as they release CPI, employment, and retail sales. The news seems likely to be negative for the pound. The recent acceleration in inflation is expected to stop, job growth is expected to have slowed, and the year-on-year rate of growth in retail sales is forecast to have fallen. The news is likely just to reinforce the picture of a sluggish UK economy that we've gotten from many other indicators. So it's likely to be negative for the pound. There's a lot of data coming out from the U.S. too. Two Fed surveys, the Empire State Manufacturing Survey for May and the Chicago Fed National Activity Survey for April, will complement the industrial production data for April. The main question is probably whether the data will be even worse than expected. So those data are potentially negative for the dollar, I would say. Several bits of data on the U.S. housing market are coming out as well, such as the NAHB, National Association of Home Builders Housing Market Index, housing starts and building permits, and existing home sales. Now, in contrast to the industrial data, these housing figures are forecast to be relatively strong. That would indicate that the small rise in interest rates last December didn't derail this interest rate sensitive sector. That, on the other hand, could prove positive for the dollar. Now, the U.S. CPI also comes out on Tuesday. While that isn't the Fed's policy target, the policy target is the core personal consumption expenditure deflator, an acceleration in inflation according to this measure could help the dollar. Canada also releases its CPI on Friday. Headline is inflation is expected to accelerate sharply. That could support the Canadian dollar, but I'd expect that in the wake of the recent fire that the Bank of Canada will want to continue supporting the economy, so I expect them to take a relatively accommodative stance regardless, especially because Canadian retail sales, which come out at the same time as the CPI, are expected to fall sharply. Now, speaking of inflation, the Reserve Bank of New Zealand releases its two-year inflation expectations. If inflation expectations fall significantly, thoughts of a cut in rates in June, which is now seen as around a 50-50 possibility, could tilt decisively in favor of an easing then, which would be negative for the Kiwi. Japan's first quarter GDP is expected to be just barely higher. That's a disappointing bounce following the large fall in the fourth quarter of last year. For the previous two quarters, all growth has come from overseas, while domestic demand's been negative. Continued weak growth and dependency on overseas could put additional pressure on the Bank of Japan to ease, which would be negative for the yen. As for Monday, today, not only is there little on the schedule, the aforementioned U.S. Empire State Survey is the major item, but it's also a holiday in Germany, France, Switzerland, and Norway, so activity is likely to be thin during European time. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.